Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Pushkar Mukewar, Co-Founder and CEO of Drip, to discuss emerging trends in global trade, rise of nearshoring, and how the supply chain crisis accelerated digital transformation. Pushkar, it's great to see you again. Welcome back to Trade Talks. And since we last spoke in October, what are some new emerging trends in global trade that are having an impact on the U.S. market?
Great to be back, Jill. So I would say that, there's been a lot of things happening. First, I think there's an increased focus on improving infrastructure of ports and automating warehouse solutions. I think logistics companies and governments are increasingly focusing on this, just given the supply chain crisis we've all been experiencing. Major companies are really starting to focus on kind of improving reliability and managing risks of their supply chains. I think specifically amongst retailers in the US, we are seeing a trend towards nearshoring or onshoring their manufacturing over time. Of course, relocating their production from Asia in order to sort of avoid bottlenecks in one region to really impact their operations the way they have, perhaps more so in the last 6 months. And I think the other trend we are seeing is that developing countries are also increasingly focusing on kind of engaging with other developing countries. There's been a number of trade pacts and trade agreements being formed. And as a result, there is a chance that some of the developing country suppliers are going to start focusing also on non-EU and non-US buyers who've been typically their main focus areas in the past. So yeah, I would say these would be some of the trends.
And on that last point, we've seen a lot about the rise of nearshoring and how this approach may see increased adoption for both small, medium-sized businesses and larger companies. Have you seen this happening with your clients, and how do you see trade patterns changing in the near and long term?
No, absolutely. I think this is a trend which we are seeing amongst both large companies and SMBs. I think there's an increasing focus towards shortening supply chains, as well as sort of diversifying supplier base and not being dependent on just one country. I think that the trends, are sort of slightly different based on the supply chains you're talking about, right? So wherever buyers are customers, US buyers are dependent on more commodity kind of raw materials, the shift has been more rapid. We are definitely seeing, for example, shrimp is a segment where we have a bunch of customers, and we are starting to see a lot more inquiries and a lot more trade going to more closer geographies like Latin America. Ecuador is one of the large suppliers of shrimp, and moving away from far off geographies. However, in case of complex products, companies like Apple, Dell, which have made large investments in sort of setting up manufacturing bases in China or in Asia, it's not that easy for them to switch suddenly, right? Of course, there is an increasing focus towards over the next, let's say, 3-5 years. How do they diversify their supplier base and have like kind of, supply chains which are more diversified? But in the near term, they have to kind of deal with the political risks as well as the uncertainty and weather the crisis. And I think one thing which we're also seeing is that a lot of our US buyers are definitely asking us to connect them with other suppliers with the idea that they want to diversify their supplier base over time. So yeah.
How has the supply chain crisis pushed cross-border operators to advance their digital transformation?
So I would say, I can think of 3 areas. One is really logistics companies, which are now increasingly adopting digital ways. So we've seen launches of like electronic bill of lading, things like that, which will just make supply chain operations more efficient over time. SMBs, I think with the COVID situation, with lockdowns, obviously have had to really sort of transform their businesses to operate in the new world. A lot more digitization, a lot more automation, being able to work remotely, operate their businesses remotely. And I would say the third trend has been really around financial services companies. We've obviously seen fintech companies like ours actually, see very strong sort of tailwinds because again, using kind of data, operating digitally is something which is really helping fintech companies to sort of fill the gap which most lending institutions haven't been able to, particularly because of increased need for working capital, which many of the SMBs have now in this world. So,
what role does Drip Capital have in this transformation?
So we are a digital trade finance company. Our focus is really on helping SMBs which are engaged in cross-border trade. And I think if you think about it, Jill, trade finance is an age-old sort of paper-based industry, which hasn't really changed for decades. And really our aim has been to leverage technology and data to sort of make financing and underwriting of cross-border transactions really seamless and fully automated, right? We are a digital first platform, which means that the entire process for an SMB, right from onboarding, financing, and servicing, is through a digital first kind of portal. And our transaction processing is also fully automated, which is what allows us to essentially service these small ticket transactions, which typically banks have avoided. And yeah, I think we are, because of the crisis we are in, we are definitely seeing an increased demand for our product, just given the way we operate. So.
And finally, Pushkar, what are your plans to grow the US business?
So in the US, we basically offer sort of a buy now, pay later solution for US based importers, where the idea is that any importer who gets onboarded onto the platform can use us to pay off their supplier and get flexible payment terms, 60, 90 days, from us. And I think this business, which we launched in COVID, just given the strong demand in the market, has seen a very rapid growth. And I think we'll continue to sort of invest in building our go-to-market in the US, acquire many more importers. We are definitely looking at partnering with many ecosystem players, whether it's logistics companies, freight forwarders, e-commerce marketplaces, which are engaged in cross-border trade and working with a number of importers, to see if we could offer our solution and just get more and more importers onboarded. I think over time, we also want to expand our product offering to make trade just easier for importers. So offer other kinds of trade facilitation services in partnership with companies like insurance providers, logistics companies, just to aid and help alleviate some of the pain points which small business importers have when it comes to managing their trade transactions. So.
All right, Pushkar, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thank you, Jill. It was great joining the conversation.